Mitch, this is something you watch very closely, the M&A activity and what it means for the overall economy. What has the first 7 months of 2025 told you about how much momentum we can see in the back half of the year for M&A?
Well, the year got off to a sort of slow start, Dom, but we are seeing a very strong July, and hopefully that will lead into the second half of the year with a continued increase. If you look at January through June, it looked like the Swiss Alps. It was up, it was down, it was up, it was down. But things feel different now. We're certainly seeing elevated activity and preparing for deals. We're working with clients to prepare their deal strategies for their boards. There's a lot in the pipeline, a lot of backlog, and I think the second half of the year is going to be busy and strong.
How much, Mitch, of this story is tied to optimism around the regulatory and governance environment with regard to the deal-making space overall? Is it that the deregulation is going to be a tailwind for many of these companies to try to consolidate, and that the Trump administration has a hand in maybe crafting some of this tailwind for all of these M&A transactions?
I think that's part of it. I mean, certainly, you can speculate that the deal that you just mentioned, the railroad deal, may not have happened under Alina Khan, administration, and it certainly seemed to get through with fewer compromises this time around. But it's not just that; it's also there's confidence in the capital markets. There is a light at the end of the tunnel around what's going on with tariffs. And I think more importantly than all that is the bid-ask gap is actually closing. If you look a few years ago, the difference between a bid and an ask was about 2 points. Now it's down to about a half a point. So I think that has a lot to do with that. Now these deals are affordable and there's more alignment between buyer and seller.
How much do interest rates factor into the overall environment for deal making in the coming months and years? Do we need to see a lower rate environment in order for this to keep going on?
We do. We need to see a lower cost of capital. It hasn't stopped deals from happening. I think people have gotten comfortable that we're not going back to where we were 3 years ago, but they'd still like to see a lower cost of capital. We're still expecting another 2 turns down in the interest rate this year. I think that's fueling optimism as well.
And sector perspective wise, we've been speaking so much about the technology space, what's happening with artificial intelligence, some of the IPOs that are coming out, some of the SPAC deals that are kind of maybe in the works. With regard to deal making, what exactly industry-wise is going to be the one that you are going to watch out for the most in the next, say, 6 to 12 months?
It's technology. It's been technology for the last 5 years. It's going to be technology probably for the next 5 years. There's a race to get the most sophisticated, most advanced AI technology to modernize businesses. It's not just tech to tech, but all businesses are looking at AI technology. And quite frankly, acquisitions are the fastest way to get there. Tech has also been busy because they're not so much impacted by the potential tariffs because they're not necessarily shifting hard assets across international boundaries. So that has freed them up to do deals in the past 6 months where others have not. The other areas that we're going to see continued M&A activity is oil and gas. Oil and gas had a really strong year last year. It continues to have a strong year this year. Life sciences, they have a lot of cash on their balance sheet, and they have to build up their R&D pipeline. And then there's been a surprising surge in media and entertainment deals this year.
And one last point before we let you go, Mitch. As you go through the assumptions with you and your colleagues at EY, what exactly is the economic backdrop you guys are factoring in, your base case over the course of the next year?
We're certainly looking for inflation to stay flat or go down. We're looking for GDP to increase a little bit, and we're looking for 2 turns down in the Fed borrowing rate.